Wow, Austin, that was one of those examples of you think you know, but you actually have no idea. Sitting down with the CEO of what we thought was a cannabis stock, a weed stock, and got a really different story.
Yeah, no kidding. I had no idea that they also owned Shock Top and Sweetwater 420, as well as having now 500 distributors around the country. And what's also really interesting to me, though, is to see how the United States has sort of been the foundation for their beverage alcoholic kind of business segment, right? I mean, this business segment grew by 137% year over year. And that's what's really, in my opinion, pushing their top line revenue higher. So it's just really cool to see what the heck is going on with this company and how it's evolved and changed so much since 2018, 2019, when them and a bunch of other companies took Reddit by storm, being one of these weed stock ideas.
Yeah, people love their beverages. Of course, the company we are talking about is Tilray Brands, and we have their CEO, Irwin Simon, on the show today.
I'm Austin Hankwitz.
And I'm Katie Perry, and this is the After Earnings Show brought to you by Morning Brew and Stakeholder Labs. This is the show where we bring you, the retail investor, up close and personal with the people behind the companies you care about.
All right, well, let's get into it.
Irwin Simon, welcome to the show. You are the CEO of Tilray, and we are excited to get into it today.
Well, thank you for having me. Great to be here with you guys.
Well, thank you so much for the time. Want to start out by talking about your brand recognition in the market. If you look up Tilray online, you'll see a lot of listicles, things like that, bucketing you guys as a weed stock. And I know that's where your beginnings were, but would love to hear what the company is selling now, what the portfolio looks like, and how you've evolved in the past few years.
Kitty, good question, and it's interesting. You know, I go back, and my first company I started was in the natural organic food and parlayed it into the personal care industry, and came out with clean foods, no genetically modified ingredients, organics, and did that for 25 years. And after 25 years, I kind of stepped back and sort of said, what's the next big evolution? I'm somebody that's always trying to be ahead. And, I was one of the first into almond milk, oat milk, soy milk, rice milks. And, today they're staples in everybody's home. If you don't have oat milk, at a barista or a coffee bar or something like that, I think people look for it more than milk. So after 25 years, I looked to do something different. And not that I was a cannabis user, but I saw so many benefits of cannabis. And with that, I was offered the opportunity to take over a Canadian, cannabis company called Aphria. And in late 2018, I mean, real late, like 3 days left in December, I took over this company, Aphria, as executive chairman. In 2019, because of changes that had to take place in management, I took over the company in March of 2019. We were $50 million of sales, basically almost out of money. And Canada, in October of 2018, was the only country in the world today where cannabis is legal from a federal standpoint. There's nowhere out there where recreational cannabis is legal. So very quickly, I moved in to clean the company up, strengthen our balance sheet, raise money, got rid of unprofitable businesses, and Aphria became cash flow generating EBITDA company very quickly afterwards. But the U.S., where cannabis was not legalized, and everybody's saying it's going to legalize, it's going to legalize. Now, cannabis is legal in 27 states today from a recreational standpoint, but cannabis is not legal from a federal standpoint. So today, Tilray cannot sell cannabis in the U.S. because we're a listed NASDAQ company. And there's none of our income can come from cannabis. So with that, not knowing and depending upon government regulations, depending upon the approval of cannabis from a federal standpoint, I knew I had to do something with an adjacency to the cannabis business, and something ultimately to set up if one day cannabis became legalized, how could I, from an adjacency standpoint, integrate it? So I figured I would go into the beverage or beer business. So in late 2020, there was a business called Sweetwater Brewery in Atlanta, Georgia. that owned 420, and 420 is a very popular date within the cannabis world. So in December of 2020, I acquired Sweetwater Brewery, doing about 2.5 million cases, basically sold in the South. Georgia was the strong market for it. And that was our first entry. Very quickly after that, a little thing called COVID came along, and all, on-premise shut down. But we were selling beer into grocery stores and retailers like that. So that was my first entry really into the beer category. As somebody, I always liked beer. And, there's nothing more refreshing than a good cold beer. And honestly, I like beer better than alcohol, our spirits. So with that, started to build out our beer business, started to make many changes. I realized the category was declining and needed to make some change in it. Along the way, I was seeing nothing happening in regards to regulation in cannabis in the U.S. So with that, I realized I had to get bigger in beer within the U.S. Now, along the way, we also made some other acquisitions in the cannabis industry in Canada. We acquired Tilray, and ultimately changed their name. We did a reverse merger. We acquired Hexo Redecan from a standpoint, in our cannabis businesses. But there was nothing I could own in cannabis in the U.S. And ever to get to a scale, I realized I had to get bigger within the beverage business. So went out to continue to buy, different beer companies. We acquired Green Flash, Nelson, and Alpine, which were strong brands on the West Coast. Then I went on to acquire Montauk Brewery, which was started by, two young entrepreneurs. Last year, we acquired from Anheuser-Busch 8 of their craft brands. And then also along the way, I acquired a spirits business called Breckenridge Distillery, which was a strong manufacturer of bourbon, gin, and vodka. So going from 2 million cases of beer in late 2020 and on the run rate today of selling 13 million cases of beer, selling, $40 million of spirits today. That's what got us into the spirits business, and beer business in a very, quick time frame.
Great to get that background. And so if I'm understanding correctly, Aphria was cannabis company. You were leading that turnaround, regulatory changes slowing, not really moving the pace that you would need them to be. So pivoting into a broader portfolio of brands. And I'm curious, why did you go with the Tilray Brands name and not the Aphria brand?
It's a good question. Aphria, and again, you come back and look at it, Aphria started with an A. So the first time you look something up, it was an A. But Tilray was a U.S. domiciled company. Aphria was a Canadian company. Aphria had some challenges out there. And I figured I would, ultimately, as I did a reverse merger, I would become Tilray. And Tilray comes from tilling the ground and the suns and the ray from the suns, which has a lot to do with a lot of products. So that's why I went with Tilray. And originally I went with Tilray, and then I changed the name to Tilray Brands because as I look to build this into a CPG company, that it's just not, cannabis. It was all around brands. Today we have over 40 brands within the whole company. We produce 90% of our products ourselves. So, we are totally vertically integrated. And I look at it as a branded consumer packaged good company. I'm big on brands, brand equity. And ultimately, that's what gets you the multiples and values within companies today, is owning great brands and building great brands.
Irwin, that's awesome, because it really reminds me, and I've seen this on Reddit a couple of times and on Twitter, right? People call you the General Mills of cannabis. And so you guys are sort of building out this portfolio of these different companies that, to your point, it's a really diversified portfolio. If it's regulatory hang up, you guys have got some sales going on in a different sector. And, as you continue to kind of bolt on and roll up these maybe craft beer type companies, right? You guys are diversifying now into some, non-alcoholic things. So we could talk more about that. But I think it's a really cool kind of call out that you guys are building more of this CPG brand where you've evolved away from just that's the weed stock to no, they're actually, to your point, 40 different companies inside of this name, which is really awesome.
And you got to step back for a second. Is this here? You just can't be a cluster of brands. You can't be a cluster of businesses. And how do they all come together? And that's something that I'm trying to land the foundation for. And how do we build a global business? I'm somebody that has never started a brand from scratch. And I like to buy businesses or brands that have been in existence. And how do we fix them and rejuvenate them? And that's what I've been trying to do here. And, very quickly, if I didn't go into the beer business, being in the food business and the natural organic food business is something I very easily could have went into. But the reason I picked the beer business is because I saw an industry that was declining. I saw the craft beer business as, a business that had tremendous amounts of brands out there, but there was not anybody taking a leadership role. Sam Adams was the one that took the leadership role. Anheuser-Busch, Molson Coors, Constellation all jumped into it, but they were focused on their bigger brands. So that's where I felt I could make beer cool again, where it's lost its coolness, and it lost its uniqueness out there. And how did I change that? We're just, not white men were drinking beer, that everybody could drink beer. Kate should be drinking beer. And what about the non-alc? Everybody's concerned if I'm drinking beer, I'm getting my beer belly or I'm getting the bloat there. And what do we change with that? So that's the reason, I very much selected the beer business.
No, 100%. Do you have a favorite beer, if it's either in the portfolio or out of the portfolio, that you're always sipping on?
Listen, I have 4 kids. You got to love all your kids equal. I have, multiple brands within our beer business, and I'm always trying all our brands out there. I'm somebody, like how many dinner parties I go to, and there's always wine or champagne or, tequila or that. Why isn't there beer being served here? Okay. And why is beer put on a bar like there's a can of beer to show we have this here? Why isn't beer positioned, in a better fashion and cooler out there? So that's my whole thing, is how to make beer much more relevant and not just going into a bar and buying it on tap. And what's the position on canning? What's the position on product? What I'm trying to do is beer be part of many, many universities, beer be a part of many, many sporting events, beer, ultimately being served at dinner parties, beer being served at white tablecloth restaurants. Ultimately, whether it's our non-alc beer, our light beers, our lower carbonated beers, we're also looking at doing beer in the morning with coffee and that, where you get that lift, so you get a little bit of alcohol. So
beer in the morning, count me in.
Beer in the morning. So.
Well, I think what's interesting, and especially for the new sort of listeners right now of after earnings that might be looking up the stock, they said, wait a second, this guy took over the company, call it 2018, 2019. Revenue has increased by 300, 400% since then. You guys are well on track now to hit $1 billion in revenue over the coming years. You have 40 different sort of companies in your portfolio, but the stock price is down so much. And so my question to you is, what do you think the disconnect is there between the progress you're making as a business and what the street is kind of doing, right? What's the reason for the disconnect in your opinion?
Great question. And I come back, there's an old saying out there, someone tells you don't look good. You say, no, I feel good. No, you don't look good, but I feel good. They just start to say, wait, now maybe I don't feel good. When you're inside this company and when I tell people about the exciting things we're doing, beer, cannabis, spirits, medical cannabis, I get requests for people to come work here all the time. Then you go look at your stock and say, maybe I'm not doing such a good job. Okay. And you're right. Tilray stock, now this is in the early days, was trading at $300 a share. when I took over here, the stock was much higher. What's happened very much so, and this is why we look to diversify as a company. Number one, cannabis stock just got decimated because of non-legalization in the U.S. Number two, almost every cannabis stock is not profitable today from that standpoint. Number three, a lot of these cannabis stocks got into trouble, from a regulatory standpoint, from a financial standpoint. So there's a lot, of bad omens on cannabis stock. The other thing is a lot of institutional funds cannot own cannabis stocks. So you look at our stock today, we've traded close to 60 million shares today. And we probably traded more shares than Apple did today, okay? And we have a very, very large retail, presence within our stock, which I love. Retail shareholders, there are consumers, there are shareholders. But, they trade in and out for pennies. So that is one of the big reasons. And that's the other reason why I had to diversify the company, is not to be just a cannabis company. So challenges today, bring more institutional shareholders into this company other than retail shareholders. Retail shareholders are important for us, but for them to become longer-term shareholders. If you look at Tilray today, it's 5 years old, and from a profitability standpoint, it's taken us time to be profitable. Now we have much amortization and depreciation and stock comp, but my whole thing was to get us cash flow positive. We are. If you go back and look at Amazon, Tesla, Apple, Microsoft, how long did it take to get those companies, number one, profitable? And for the first 3, 5, 7 years, their stocks traded within the $2 to $3 range. So again, it's understanding what's in Tilray. The other thing is, I sit here today, our debt levels are way down. We're 1.7 times leverage. At the end of the quarter and the year, we sit with $260 million of cash. So we got a strong balance sheet. So it's understanding what else is underneath the hood here. And I think that's what's important. And that's one of the things I need to do, is get out there and tell the message of what really is in Tilray today and bring in additional and institutional shareholders.
I think you're right on the money there. I mean, I'm just looking this up in real time. You guys have traded 60 million shares today. Apple has traded 17 million. So that's pretty interesting. And then as you look at sort of your largest institutional investors, what I'm seeing is there's nearly 500 million of them, but they only represent 12% of your outstanding shares. Yeah. So that makes total sense now that you kind of lay it out like that.
Yeah, 12% of our shareholders today are institutional shareholders. Wow. And where you come back and look at most companies, it's probably 90%.
It's in the 60, 70%.
Yeah, exactly. So, you know what it's like when you have a shareholder meeting, you're trying to get shareholders to vote, and you're trying to, you have your average shareholders own 50 shares, and you're trying to, track them down and everything. It's not easy at all. So,
right.
But we love retail shareholders. We really do. And, they trade, they're loyal, and they're also consumers of our products.
Yeah, Austin and I were actually browsing Reddit before the show, and definitely a lot of ideas coming from them, enthusiasm. They seem to be aligned with you on the institutional front. Somebody was like, I got a plan. It's to get more institutional. And the strategy was to reach out. So you can take that and run with it.
Good plan.
and I think the big thing also is, listen, and reading Reddit, I get, good feedback, good criticism, good compliments. There's days you got to have thick skin here. Yeah. But I think the important thing here is understanding what we're doing here and how we're getting to profitability. It's not easy to grow a company from 50 million to $1 billion in size. And we've had a lot of headwinds along the way, something called COVID. Shut down on premise. COVID shut down all the cannabis stores in Canada where you only could order online. From a standpoint in the Canadian market in cannabis, we've had price compression of $200 million that came right off our top line and come off our bottom line. We, also pay a very, very high excise tax in Canada. which is about $150 million, which is a dollar per gram. It's not on a percentage of sales. And because we're a cannabis company, insurance rates in most companies and, households and that have gone through the roof. We probably pay triple the amount just because of the cannabis effect. So there's a lot of, cost effects out there that absolutely hurt our profitability. But still, as a company, we've overcome a lot of that.
And I just want to quickly cover some really interesting, bringing up the institutional limitations. And does that hinge on the federal regulation of cannabis? Once that becomes more widespread across all the states, does that unlock more institutional opportunities? Or is this like a case by case, some companies just aren't comfortable in that area?
It's an interesting question because if cannabis tomorrow, so, there's no reason institutions can't own our stock because we don't do anything with cannabis in the U.S. And each institution has their own trading guidelines, and some probably have that they can't own any cannabis stock no matter what. And there's a lot of regulations around banking for us. Like we cannot take any of our profits from Canada and bring it into the U.S. and use in our U.S. operations. If we send money to Canada, we can't take it back into the U.S. So there's a lot of banking regulation because cannabis not being legal from a federal standpoint. And that's why we're all hoping there's changes that come into effect. Katie, I will tell you this here. In my opinion, if there was a change in regards to scheduling or regulation, and if cannabis did become legal from a federal level, there would be a lot of institutional shareholders that would absolutely own cannabis stocks. I also think a lot of the big companies, whether it's a Unilever, whether it's a Nestle, whether it's a P&G or a General Mills, would get into it because they see cannabis is a big future within the Gen Z, the millennials of the world, whether it's for medicine, whether it's for, enjoyment standpoint. And what you're seeing today, there's more cannabis being consumed in a lot of cases on a daily basis than alcohol. So, what's the hedge out there? What's the stopgate right now? It's the whole federal legalization issue. If I tomorrow could go ahead and sell in the U.S. drinks that are infused with cannabis instead of alcohol, it would be a humongous business for Tilray tomorrow. And it just, in Canada today, it's 40% of our sales. But if I could take those drinks and sell them in the U.S., you wouldn't be drinking energy drinks. And again, a lot of our cannabis drinks, you get a good high, you get a good connection. You don't have calories. You don't have the hangover from it that you can get if you consume, multiple alcohol. So big opportunity. It just, we're all stopped by, regulation out there.
Right. That makes sense. And yeah, our government officials aren't really known for being efficient.
I thought there was a chance, the Biden administration, and if I was sitting here 4 years ago when the Biden administration came into play, if I was a betting man, I would have said that legalization would be in place today. Now, you and I live in New York City, Katie. We walk in every corner and we smell it out there. It is legal, like I said, in New York City or New York State, as a state, but not from a federal standpoint. And New York State has done not a great job because a lot of product was coming in from the illicit market. A lot of product was coming in, from other states that shouldn't have been coming in here, which again, one of the big things with that from a Tilray standpoint, we have in place very strict quality assurance. We have very strict guidelines in the way we grow our product. What's the potency? What's the genetics? What's it cut with? So products coming into the marketplace are very safe. It's not cut with a fentanyl. It's not grown with pesticides and where it's coming from. So that's why regulation has to come into place for so many different ways, because today it's a drug out there that's coming in, from an illicit market. It's a drug coming in there that's coming in from states that there's no guidelines how it should be grown.
Now, before we jump into the sort of earnings analysis, I want to take a moment to talk a little bit more about your geographical sort of strategy, right? You guys now have your EMEA sort of geography contributing to 38% of all revenue, which is more than Canada and more than the US. So, from a sort of forward looking perspective, is that a market you guys are planning to expand into? Where are you guys really focused, call it in 25 and 26, so that you can hit that $1 billion in annualized revenue?
So let me step back for a second. Today we have, 10, 11 share within the Canadian market. The Canadian market at retail today is about a $5 billion market. We're the largest grower in Canada. So, ultimately, we do about $250 million in Canada today. I'd like to see that double because more and more consumers are being educated about cannabis in Canada. I think more and more consumers will come into that market. Ultimately, I think there will be a faltering out of many of the licenses that are there, and the Canadian market will condense and consolidate. And with innovation and more education around drinks, edibles, vaping, pre-rolls, flower, I think there's a lot more market share for us to, achieve there. In the U.S., this past year we did over $200 million in beer businesses. Our beer business, I'd like to see us get to $300 million of beverages, and that would include beer, non-alc, and drinks, and that, over the next year. I'd like to see our spirits business grow. So I'd like to see, us get to $500 million in size in our beverage business within the U.S. We have a business called Manitoba Harvest, which is a hemp food product business, which is food products that come from hemp, which is all higher protein from high protein products. I think there's some good growth opportunities in there. So, those are the big things. We'll continuously, and that's not really doing additional acquisitions, whether it's in beverages, whether it's in spirits. In regards to international, just take Europe alone. There's over 600 million people in Europe. With Germany just opening up and rescheduling, the opportunity in Germany and the rest of Europe for us is tremendous. Also, we're now selling into Australia and New Zealand. I'd like to see us move into the spirits and beer business internationally, and we're looking at opportunities there. I also see, and I did this in my Hain days. I went into India in a big way within the rice business. I went into China in a big way. Where could they be medicinal opportunities for us in those countries? But I think there's a big opportunities in the Middle East where we could sell non-alcoholic drinks and sell them into those markets is some things that we're looking at.
I think it makes a ton of sense. And it sort of, tees me up for the first earnings question, which is focused on your sort of beverage alcohol revenue, right? So you released earnings on July 29th, and you grew top line revenue by 25% to $230 million, aided by a 137% surge in your beverage alcohol revenue business segment. Now, the beverage alcohol gross profit margin also expanded 200 basis points to 53%. So my question is, how should retail investors be thinking about this business segment going forward? You sort of mentioned how you want the US to double, right? So get that closer to $500 million. But is this, is that more of a acquisition type play? Or, I guess so, because you sort of mentioned back in the interview how you'd like to sort of acquire existing brands and then sort of rejuvenate them. But is that going to be then the strategy for the next foreseeable future for this specific business segment in the US? Or is there maybe, other ideas that you guys might have?
So number one, we acquired some great brands and they're in early stages. Montauk, brewing, great beer.
Oh, yeah.
And we're expanding that, into the tri-state. So New Jersey, Connecticut, New York, you'll see it over 100 million people there. And one of the things we're going to do is focus on, regional areas and what should we take national. We acquired 8 brands from ABI, and these are some great brands, and we're seeing some great growth on Shock Top, 10 Barrel, some of the new innovation that we acquired from that. So right now, what you're seeing is growth coming from the brands that we acquired. And that is some of the innovation that I talked about before in regards to our pub cerveza, our pub beers, in 10 barrel, in regards to some of the new innovation that we're coming out with Shock Top, some of the new innovation that we come out with Montauk and Sweetwater. So a big part of our growth has to come from the foundation that's in place. And that is new products, new innovation. The other thing is we have 500 beer distributors out there. And these beer distributors are looking for growth because some of the bigger brands they've had declined. So they're looking for companies today that are out there, innovating products, spending money on distribution, spending money on the brand. And they're also looking at the companies who are going to do additional acquisitions that they have the opportunity to get those brands. So we have that in place, our distribution. We put, salespeople on the street. We put headquarters people on the street. We went out and hired a great marketing department, social media. We're doing a lot around sporting events and sporting teams. We're doing a lot around universities, et cetera. So that is something we're doing to grow our base business of what we own today. We have today 13 brew pubs out there. And that is a big part of it, where brew pubs, you go to our breweries and, drinking beer, eating good food, and having a great experience. Our whole thing is how do we connect people? So we'll continue to, come out and introduce and open more and more brew pubs out there based around our beer and based around connecting people. And last but not least, we're going to do more acquisitions out there within the beverage category. We're going to do more acquisitions within the spirits category. We'll do additional acquisitions as we look to take some of our brands here and can we buy some businesses in Europe and bring them over with those businesses. So that's how we ultimately will grow our beverage business.
Yeah, that's a really important breakdown, I think, because it sounds like it's kind of a two-step process. You have the inorganic growth via the initial acquisition, and then it's about building that brand, improving distribution, innovating the product to scale it up from there. And on the topic of M&A, there's been significant dilutions for your shareholders, right? And how do you communicate to your very passionate, vocal investors when you say, hey, we're still in acquisition mode? We still want to do more of that when that's currently being funded by that dilution. Is that like the plan moving forward, or how do you keep people loyal to as shareholders with that going on?
A great question. And we have to go out there and do accretive acquisitions. And that's the big thing out here is if we're going to go out there and be using equity to buy or, out there raising equity and using it for acquisitions, that's the big thing is raising money for acquisitions that are accretive to earnings and accretive to growth and not just acquisitions that don't contribute anything to the top and bottom line. And that's what I want to, tell shareholders. That's the acquisitions that I want to be doing out there. And that's what I want to be using our cash and stock for. So ultimately, that's what they got to get comfortable with. We're doing this for the growth of the company. And that's how we got to, where we are today in revenue and where we are today in EBITDA and where we are in free cash flow.
Appreciate that breakdown. Let's now talk a little bit more about your path to profitability. You guys did a great job narrowing your net loss from negative 120 million to now negative only 115 million. You're doing, your adjusted EBITDA increased by 37% from 21.5 million to nearly 30 million this quarter. So I'm curious, what levers are you pulling to cause this 37% jump in adjusted EBITDA? And what is your plan, your path to reach GAAP profitability?
So if you come back and look at our net loss, our big part of our net loss today and in the quarter, there was about a $15 million loss. The majority of that comes from non-cash. It's
Correct.
Still a loss. It's a GAAP loss. And, ultimately, so it was amortization, depreciation, and stock comp was the big thing. So I'm big on cash and I'm big on free cash flow, and you're generating cash to drive your operations and to pay for your operation. That's what's important to me, and I don't want shareholders to look at that. So
Correct.
because again, as what I call a startup, and we have built tremendous facilities out there and we have, pretty significant depreciation and amortization. That's why you're seeing, the adjusted EBITDA that you're seeing out there. So to get the profitability, I want, our investors to look at us from a free cash flow standpoint and from an EBITDA standpoint. I know some investors look at it from an EPS standpoint, but I ask them to take out what are the non-cash aspects of it too.
I think that makes a ton of sense. I'm a big believer in free cash flow, so I'm right there with you, man. So do you have then maybe, I guess what you're saying is, there's always variables with depreciation, amortization, stock compensation, things of that nature. But you're saying that you really want to encourage investors to look at your, forward looking, the free cash flow, cash from operations, things of that nature, and how that trends over 2025, 2026 versus a, sort of a more defined path to GAAP profitability.
Exactly. Listen, we're not the General Mills. We're not P&G that's been around for 100 years. Okay. We're a 5-year-old startup company that's done lots of acquisitions and have lots of assets and lots of high valued assets to depreciate and amortize over a period of time. So I think that's what I ask, is to look at us a little differently. How are we growing this business from scratch? How are we, getting organic growth sales, not just from acquisitions? And what are we doing to generate free cash flow here? Not losing money from operations. And that's very much how I want investors, very much to be looking at us.
Yeah, I'm just kind of looking here in real time, and it seems like Wall Street's on your side on that one. I think they're projecting about 50 million in cash from operations with your business in 2025. So it's really exciting, and it seems like that'll expand to about 75 million in 2026 is what they're hoping for. So as a shareholder, I'm also hoping for it.
and the key here is, I come back and say this here, as a company today and putting the infrastructure in place. So today, with our run rate, last year being about $850 million of sales, and this year, we gave projections of 950 to $1 billion. That was our forecast. The more we can grow our sales, I have in place an infrastructure that could run a $2 billion company easy. So after your cost of goods, and being a public company has, lots of high costs associated with it. You heard me say before, being that cannabis company has lots of, costs associated with it. So building out an infrastructure with good process, good disciplines is something we had to do. And now that we hit that, 950 to $1 billion mark, I got the infrastructures in place to right size that. If I get the $2 billion, which is, one of my goals out there, there's a lot of cash this company, has the opportunity to generate. A lot of costs got to come out of here. Ultimately, I think our EBITDA margins in the last quarter were about 7%. I'm somebody, and I'm not out there making, giving guidance or anything, but I like an 18 to 20% EBITDA margin business. So I'm a very focused person on margins, very focused on generating cash, and very focused on how we take costs out of these businesses. With the Hexo acquisition, we took $31 million of costs out. There's a lot more costs that can come out of the beverage acquisitions within our beer business. Our traditional beer margins with Sweetwater were 45%. The acquired businesses that we acquired from ABI, the margins were in the 20% there. So there's lots of opportunity to take costs out of these businesses.
Well, I'm sure too, with your massive portfolio, I mean, there's definitely synergies across all your different products, to your distributors, to how you guys are manufacturing things. I mean, I definitely see a pathway for margin expansion with this business.
And that's very much the plan. I just came back from meetings last week with the team and board meetings, and margin is something I kept focusing on. And 2 points of margin in this business, what it's worth to us if we can get that.
Yeah, what I'm hearing is a lot of diligence on balance sheet on your end, but also seems like you're sort of a brand guy. It sounds like you appreciate the value of brands. You like finding them, acquiring them, building that up. And I'm curious, I feel like the beverage category is so competitive in terms of standing out. You have brands like Liquid Death doing crazy stunts and collabs. All the major beer brands, Super Bowl ads. How do you think about differentiating these craft beer brands that you've acquired from a marketing standpoint, knowing you're really trying to keep kind of costs within the realm of unlocking growth, but also being responsible with the spend?
So on one hand, the beverage category from a size is in the trillions, okay? And there's some big brands out there, the Coke brands, the Pepsi brands, the Dr. Pepper brands. Consumers are not drinking the sodas today, and there's a lot of new entries into the soda world. So first of all, it's a big category, the beverage category, and I like to play within big categories. Secondly, we have 6 manufacturing facilities out there today. We have an infrastructure of sales, marketing, and quality people out there today. Then we have a major asset called distributors. And these are DSD distributors, direct-to-store distributors, distributors that are selling on premise, and they're hungry for new products. So the beverage companies out there, and it's amazing how many beverage companies I've been approached to buy that are selling through food distributors or selling differently. They're having trouble getting their products on the shelves, number one. Number two, the cost for them to go through these distributors is really expensive. So we have a benefit of having a great distribution, partners in place. And then we have an infrastructure out there of sales, marketing people that can sell to the supermarkets today that can get products out there. Now, listen, there's an old saying out there, you can stack them high. Depletions are the key word in this business, and depletions are the takeaway. Consumers got to pick up your products. So you're two of my consumers. How do I get you to buy my Liquid Death or my, Highball or my Runner's High? And through my social media, through my advertising, through my investment, how do I get you educated is the key to that. Because there's a lot of products out there. There's a lot of beverages. But my key is to get you knowing about my products. So I feel good about I can make the products. I can feel good about innovating the products. I feel good I can get the products on the shelf. But how am I getting you to buy them? It's a key.
Question I was stirring on when we were preparing for this interview was the company culture, right? You guys make fun products, if you ask me. I just heard earlier in the interview talking about morning beers. I love me some morning beers, especially when I was in college. So what's the company culture like? I mean, are we sipping beers at the desk? Are we taking smoke breaks? Are we hanging out? Like, how do you sort of navigate that with the products that you guys sell?
So I'd like to invite both of you to come and hang out with me for a day. Okay.
I would take you up on that. Let's do it.
And do it. The culture is, and it's interesting. I am a believer in engaging everybody in the company for feedback. I will tell you, I have a son at USC, and I had his 4 friends sitting here listening to our strategic plan meetings and coming back to us with their input, what they're seeing out there. As a company that's involved in the type of products we are, we listen to all our Reddit, readers and Reddit influencers. We listen to our, retail shareholders. So the culture is we're having fun. We're trying to connect people. We are very responsible to our shareholders. We're very responsible to our consumers. And with that, we want to help connect people and change the world out there. Now, we've talked about how we want to be about well-being and healthy. Well, it's hard to talk about being well-being and healthy when you're selling, beer and products like that. But how do we connect people? And what can we do to put out there good quality products? And we're all having fun. That's the big thing. There's fun in what we're doing. And I'd love to, Kate, you're in New York. I'd love to invite you out to our Blueprint, our Blue Point facility out in Patchogue, Montauk. Come up to our offices. Every day at 4:20, there's beer all over the place here. We have, on tap our brands. There's cannabis. Where it's legal. So it's a place that's important and there's a culture, where everybody connects, and that's something that's been very, very important to me. I like I said, I'm big on brands. I had twin boys. I wanted to call one brand and one equity, but my wife wouldn't let me. So, but it's very important to have a culture within your business, and that's a big part of what's in Tilray today.
We are wishing you the best of luck, Irwin.
Yeah.
Man, I'm so
Please,
excited for you guys.
but please follow up with us. I'd love for you to let me know with Baron. Love to host you here. Okay.
Yeah, watch out for me around the Blue Point Blueberry though. That's my jam. So definitely gonna take you up on that.
I'm impressed that you know that. But there's a big fridge right in the front where you walk into our lobby. So please come visit.
Amazing.
Thanks, Irwin. Appreciate the time, man.
Yeah.
Hey guys, thank you. And anytime, let me know. And I'd love to see you guys in person.
What an awesome conversation with Irwin, the CEO of Tilray Brands. I had no idea that Tilray was not just like this weed stock that I read about on Reddit and may or may not have purchased back in the day for some fun. I didn't know. I mean, they're literally becoming the General Mills type portfolio of marijuana, but not just from a marijuana perspective, but also with all these beers and energy drinks and everything else under the sun. I mean, they're really going out, they're finding existing brands that could use some extra distribution, and they're sort of acquiring them and then bolting them onto their existing business and leveraging the existing distribution and everything else they've done to sort of build out this awesome portfolio now of 40 plus companies. I'm blown away, to be quite honest with you.
Yeah, you're right, Austin. And I love how they're not waiting around for the regulatory landscape to change. They're setting up this CPG infrastructure so that when that happens, cannabis can be an ingredient across their portfolio. But in the meantime, they are building up this muscle in beverage and spirits. He even previewed a water that they're debuting. So I think that's a really smart strategy. And it's just a testament to sometimes you do need the long read, right? Sometimes the quick headline on social media doesn't tell the whole story. So really appreciated Irwin giving us his time and breaking down sort of how he sees the future of this business.
Yeah, major shout out to Tilray Brands for joining us here on this episode of After Earnings. And I think something that Irwin said that I think a lot of other retail investors should focus on, right, is this idea of sort of cash flow, that free cash flow, cash from operations sort of line item there on their cash flow statements are really important because, to his point, you will have these weird one-off stock compensation, depreciation and amortization type expenses that are non-cash expenses, making it look as if this company lost $100 million. But in actuality, I mean, they're free cash flow positive. So I think that's just a really important differentiator that you normally only see with sort of like software companies and things like that. But to his point, I mean, this is only a 5 or 6 year old company. So he's definitely sort of leaning into that infancy, but it seems like they're moving in the right direction.
Also, Austin, we got the tour invite at all of their breweries, I believe. That was any of them. So we'll have to do that and report back. With that being said, this has been After Earnings, the show brought to you by Morning Brew and Stakeholder Labs. Thank you so much for tuning in, and we'll see you next time.